Hey, I'm Jason Retailgeek Goldberg. I'm the Chief Commerce Strategy Officer for Publicis Groupe. The sales data for 2024 in the US is finally out, so we now have a complete picture of how the year went. So here's everything you need to know. Stick around to the end and I'll tell you what to expect in 2025. Grab a coffee and let's get into it. So based on the U.S. Department of Commerce data in 2024 in the United States, we sold $7.4 trillion worth of stuff. That's a lot of stuff. It's 25% of the whole U.S. GDP. But you almost never hear retail analysts or the National Retail Federation talking about this number. The number we all tend to focus on a lot more is called core retail sales. And that's the full number, but without restaurants, gas stations, or automobiles in it. Last year, that number was $5.3 trillion in sales. That was up 3.6% from the year before. It's up over 40% from before the pandemic. So if we look at that number over time, over the last 30 years, the 30-year average growth for that number is about 4.6% per year. The 10-year average, the 10 years right before COVID, we were averaging about 3.6% per year. So the average had kind of declined a little bit, as you can see. And then you'll remember the World Health Organization declared a national pandemic. We all ignored it. The NBA canceled its season and we all panicked. And we were all terrified to see what would happen in retail. But what actually happened is we mailed trillions of dollars to every man, woman, and child in the United States, and we didn't allow them to spend any of it on travel or Taylor Swift tickets. And the result was we had the greatest 3 years in the history of retail. So that was a really challenging and interesting time for everyone. But 2023, we're all curious to see what would happen after all that economic stimulus had worn out. And sure enough, in 2023, we returned to Earth, but we were still 3.9%, so below the 30-year average, but actually above the 10-year average, so not bad at all. So this brings us to 2024. And again, in 2024, we hit 3.6%, which was that 10-year average. So in general, you would call that a very average year in retail. Most people watching this video are probably particularly interested in e-commerce. E-commerce sales for 2024 is going to come in at $1.2 trillion. That's up nearly 8% from the year before. It's up almost 110% from before the pandemic. And it represents 22.5% of total core retail sales. So more than 1 out of every $5 spent in the US last year was spent in e-commerce. And again, if you kind of look at the last 20 years in e-commerce, we've had very robust growth every year, but you could see it was starting to decline before the pandemic. On average, that was about 17.7% a year of growth. Then we locked everyone at home. They all learned how to shop online. They were going to stores less. And so we had this huge spike in e-commerce. People started to get vaccines. They started to get more confident. They returned to stores. And so e-commerce growth curtailed a lot from that crazy spike we had in 2020. So after the 3 years of COVID, after all the economic stimulus, we're really curious to see what would happen in 2023 if we'd return to our regular cadence. And we had a decent year. We were up 9%, still much lower than that historical average, but kind of in line with what we would have expected before the pandemic. And so now sales are actually down a little bit, which is concerning. So e-commerce was 7.9%. A lot of this is what we call the law of large numbers. It's much harder to grow e-commerce because e-commerce has become such a significant part of the total retail picture. And so I think we can expect to see those kind of slower rates of growth for the foreseeable future. If you kind of think about it over history, e-commerce started out growing a lot faster than retail. Retail's growing about 4%. E-commerce is growing at 17%. If we zoom into these last few years, we're still talking about e-commerce growing at more than twice the pace of total retail. And if you actually take e-commerce out of the core retail number, so you compare brick and mortar growth to e-commerce growth, brick and mortar retail growth last year was only 2.4%. So again, e-commerce continues to be the driver of growth. It continues to be the most important story in retail, although the absolute growth rates are predictably starting to decline. But so far, we've only been talking about averages, and I always like to remind audiences that averages are kind of dangerous. This is Nepal, and on average, Nepal is flat. it has just as many feet of elevation as it has decline. And so if you were just to say what's the average elevation change in Nepal, well, it's 0. But if you look at that average, you would miss the very important mountain in the middle of Nepal called Everest. And so when we look at these retail numbers, we want to get beyond those averages and understand what's happening in individual categories. Now, unfortunately, the U.S. Department of Commerce data has something they call category sales, but it really isn't categories. What it really is channels. So the U.S. Department of Commerce data can be sliced and diced by where customers shop. Did they buy something from an auto dealership? Did they buy something from a Target? Or did they buy something from a Gap? If they buy clothes at Target, it's classified as general merchandise. If they buy clothes from an auto dealer, it's categorized as auto dealers. And increasingly, they're buying things online, so it gets categorized as e-commerce regardless of the kind of goods it is. So this is an imperfect system, but it's the system the U.S. Department of Commerce has been using for more than 30 years, so it's consistent, and it gives us this great historical comparison of data. And if you're just curious how the U.S. Retail economy breaks down by category or by channel, these are the big channels. Cars and e-commerce are the 2 biggest channels. Restaurants is the 2nd biggest. Then we get groceries and general merchandise. By the time you get down to clothing, which I think is the 8th largest category, it's only about 6% of spending. So we're starting to have very small segments as we move down to these more specialty categories of retail. And if you say, hey, what were the winners and losers in 2024? Well, e-commerce and restaurants were the biggest winners in terms of growth from 2023 to 2024. Auto parts did very well. General merchandise, pharmacy, and clothing all outperformed the industry average. But the big losers were things like gasoline, shoes, sporting goods, furniture, office products, and department stores. Now, I don't get too excited about the year-over-year changes in the channel sales, because if a channel had a bad year last year, it's comping against that back year. So these numbers tend to fluctuate based on the larger, longer trends. So if we say, hey, who are the winners and losers since the pandemic, a 5-year horizon, which is a lot more interesting, things start to really illuminate, right? So there really are only a few big winners. The 5-year winners, e-commerce, restaurants, and auto. The giant losers, office products, which essentially have the exact same sales they did 5 years ago. Department stores and consumer electronics have smaller sales in 2024 than they did in 2019. And those are both relatively small parts of total spending anyway. So those categories have really struggled since the pandemic. Another way to think about this, though, is in 2024, we sold $183 billion more stuff than we did in 2023. And you say, well, who won all those incremental sales? And this is where the story starts to get really alarming. If you take that $183 billion of growth pie that we had last year, the first 31% of it went straight to Amazon. Amazon's gross merchandise value in the United States is growing about 11% a year. So they were the fastest grower. They got the biggest chunk of all incremental sales. The next big chunk went to Walmart. Walmart's growing at about 5% a year. So again, faster than the industry average. And they took 17% of all incremental growth in the US between Walmart and Sam's Club. So those are the 2 largest retailers in the United States. They're both growing way faster and taking an outsized share of all incremental growth. Next up, you have Costco, which grabbed 7% of all incremental growth last year. Perpetually high-performing retailer in the United States. Super impressive. And then you get these direct-to-consumer from China companies, Temu, Shein, and TikTok, all much smaller than these 3, but all growing at record rates. These 3 retailers each set the record for fastest growth in the United States one of the last 3 years. And cumulatively, those 3 companies took 10% of all growth last year. So after you take these companies out, that left only 42% of that $183 billion to be shared all across the rest of retail, which meant it was really hard for any retailer not on this list to outperform the industry average. While it was an average year for retail, it was a lean year for most of retail except for the largest players in the ecosystem. And whenever I talk about this data, someone always understandably asks about inflation. And the dirty secret is, for purposes of this conversation, inflation really doesn't matter. Inflation is super important when you have an inflation anomaly, some prices that were way higher one year than the year before. But remember, every year has inflation in it. It usually has 2 to 3% inflation, and we're talking year over year. So if the inflation was the same last year as this year, then it tends to have a neutral effect on all of these numbers. And for consumer goods, inflation was pretty consistent from 2023 to 2024. There were a few specific products, some food products, famously eggs, that had very unusual outlier inflation. But when you're looking at the whole basket of goods, of everything a consumer spends, it really doesn't have that big an effect on this number. And remember, it has both positive and negative effects. When inflation is higher, people spend more of their money on the same basket of groceries that they always have to buy for their family, but they have less money in their budget for want-to-haves. So the basket might shift, but the total spending, when you're looking at this basket of all U.S. retail goods, tends to be pretty consistent. So don't worry too much about inflation for purposes of this conversation. And this brings us to the final question, which is, what the heck is going to happen in 2025? And I can already tell you the key word for 2025 is uncertainty. We've already seen Walmart and Amazon's guidance. They both had phenomenal Q4s. They killed it. They beat all the metrics. They outperformed the market. And they both forecasted a healthy 2025, but less growth, less optimism than they saw in 2024. And that really spooked investors. We saw those stocks in particular, but all retail stocks, and to some extent, the entire US stock market really eroded based on these not optimistic forecasts from the biggest retailers in the US. And those retailers said that they were adjusting their guidance because of the tremendous amount of uncertainty in the market, all right? So on top of that, we do see consumers starting to increase their debt load. They're using buy now, pay later more than ever before. That's a concerning sign for the economy. Of course, everybody doesn't know how all these tariff conversations and trade wars are going to play out. That's having a prominent effect on consumer confidence. And one particular area it really affects is home builders. Home builders' confidence declined 5% in February from January. That means they will plan to build less homes. Regardless of how the economy plays out this year, there will be fewer homes to buy, fewer homes sold, and fewer homes sold means that giant category of retail spending, home improvement, will see less sales. So this uncertainty will have an erosive effect on retail sales in the United States, regardless of how it plays out. Businesses just can't be confident in buying a lot of inventory, in making future investments, because there's so many things that are up in the air right now. So while 2025 is likely to be a very good year for a handful of really large retailers, it's going to be a really uncertain year. And it's going to be a year when some retailers make really good moves and are able to outperform the market, and other retailers underinvest in the most critical areas or make strategic errors and really struggle in 2025. So I think we're going to see a lot of volatility in the year to come. I'll look forward to talking with all of you about it as the year progresses. And until next time, happy commercing.